This is the Net Group Investments podcast, where we explore a variety of views and insights that investors care about. Welcome to the Net Group Investments podcast. I'm Demisha Greater, and with me today is Nick Andrew, the Executive Head of Net Group Investments. Nick, you gave a thought-provoking presentation at our Global Investment Summit. We're going to unpack these trends for our listeners shortly, but before we do that, why do you think it's so important to stay abreast of the major trends in a world that is changing so rapidly?
Thanks, Tumi. I think it's crucial that we try to understand these key forces affecting the global financial industry, because then as businesses or people in the financial industry, we can find ways to remain relevant and hopefully both leverage future opportunities and manage potential threats. It's also worth mentioning that when I'm talking about these key trends, what we're talking about are those that will likely have significant and long-term impact, as opposed to, on the other side, short-term forecasts, which I think one should always be wary of and keep in mind how rapidly things are changing. For example, if we reflect on the general sentiment and short-term forecasts in the asset management industry in December 2022, when everyone was predicting recession and stock market declines, you just had to wait 12 months later to see how misplaced that consensus was.
Absolutely. I recall discussing that with you in our first podcast earlier on this year. So for any listeners who would like more detail about the danger of short-term forecasts, you can definitely be sure to refer to that episode. So now getting back into the big trends you spoke about in London, let's begin with the macro environment. In your talk, you focused particularly on interest rates and inflation as indicators of the broader macro trend. Can you explain a bit on this for us, please?
Of course. Interest rates specifically are so important because they're fundamental to where all asset classes, how they actually price. And over the last couple of years, we've transitioned from what we call an artificial or abnormally low interest rate environment to a more normalized environment. And that shift has been very painful for many asset classes. Probably the most obvious one is global bonds, which are now experiencing their longest ever bear market. If it hadn't been for a really strong rally in the last quarter of 2023, they would actually have experienced their first ever 3 consecutive negative years. However, what this does mean now, because all of that is the past, is that for the first time in a long time, global fixed interest is now an investable asset class again, and should be able to play its traditional role in portfolio of providing income and diversification.
And Nick, as we know, there is, I would say, a bit of noise, but there's been a lot of noise around this question. When will the US Fed cut rates? And when they do, by how much? So what is your view?
Sure, Tumi, that's a $1 million question. When it comes to looking at rates, the Fed is mandated really to look at 2 things: inflation and unemployment. Now, let's take inflation first. Inflation has been much more persistent and higher for longer than everyone expected. In fact, inflation has stayed above 3% for the longest period since the 80s. I think it's about 38 months now. The other thing that the Fed considers is unemployment. And again, to understand the context we're in, we are experiencing the longest period of sub-4 unemployment since the 1960s. So when you weigh these factors, and you see inflation not fully under control and unemployment at record low levels, you can understand why rates have not been reduced as much as was expected and why they might remain higher for longer.
And higher for longer, a narrative. Now, Nick, another big trend you highlighted was geopolitical tensions as a constant source of uncertainty. It seems like there are just so many geopolitical issues around the world. How does one practically assess this risk?
Well, to me, there's no doubt that geopolitical risks are high on the agenda for many businesses. In my talk, I referred to the research that the BlackRock Institute does, which each month measures what they consider to be the largest global risks. And they measure them in terms of likelihood, in terms of how much attention the market is giving them, and their potential impact on the market. I can't show the chart here, but essentially they showed that the geopolitical headlines that we are seeing every day are a very real threat to stability. Things like the conflict between Russia and Ukraine, Gulf tensions, and the US-Chinese relationship. And these need to be monitored very closely. However, the other issue that cropped up as both high likelihood and high impact was cybersecurity. This one often flies a bit under the radar, but it's not something that we should take lightly or ignore. The key is to understand how businesses can position themselves to protect against these very real risks.
Very true. Now, as we know, being 2024, it's the year of the elections, and we can't ignore the effect this has on politics.
Absolutely. It's a major year of elections with as many as 60 to 80 countries going to the polls. So what does this mean? It means we're going to have lots of populist promises in the run-up to elections and also lots of uncertainty. And what uncertainty tends to mean for investors is people play a wait-and-see game, which is a dynamic that businesses across the board need to understand, plan for, and navigate.
Now, it's certainly going to be an interesting few months ahead. I mean, we've got to be watching the UK and the US as they go through their elections. And perhaps we need to talk about this again early next year to really get a sense of how it all played out. But in the meantime, you can also talk to us about how demographics are shifting globally. Now, what implications does this have, and why have you identified this as one of the trends to watch?
Yes, I think demographics are very important because demographic changes are slow but certain and significant. With aging populations and declining birth rates, the economic, social, and political consequences are profound. In fact, around 2/3 of the world now have birth rates below the replacement ratio, and that's the ratio which is required to keep the population constant. And that, together with people living for longer, is starting to mean that the percentage of people who are working and therefore supporting the rest of the population relative to the population is decreasing. This has very, very big social, economic, and political consequences. Another demographic shift that's occurred is that previously future generations have generally been better off than prior generations. However, today this isn't always the case. In the US, for example, compared to their parents or grandparents, a 25-year-old today is worse off, has more debt, and is less likely to be able to afford to buy a home. This is playing out in several ways, but most concerningly, and probably also linked to social media, is the declining mental health of young people. Other demographic shifts that are likely to have significant impacts are things like increasing polarization within countries. We've seen that in South Africa. We've seen that in the US. Disparity of wealth and immigration, all of which creates a huge tax burden on a small percentage of the population. This is something we see globally, but also very explicitly in South Africa. It's an issue that is not sustainable on its current trajectory.
No, certainly not. And I think, these are very, very big issues and things that financial planners and investors really need to consider, especially in light of longevity and, retirement planning. Now, this brings me to another big trend, and I think it's linked to this. It's about sustainability. This is something of a buzzword, not always seen in a positive light, but do talk to us about your views on this particular global trend.
Yes, sustainability certainly received some mixed reviews lately. On the positive side, our recently released Responsible Investing report shows that some companies and countries have made really good progress in reducing their reliance on fossil fuel. But for me, probably the biggest positive is that with improved technology and scale, we're seeing that the renewable energy generation is increasing and is becoming more and more commercially viable. And commerciality is key. When something becomes commercially viable, it starts to suddenly accelerate at scale and as a movement. And we've seen a bit of this happen in the solar energy area. Banks are also now earning more money from financing renewable energy than fossil fuels. So again, this is a big catalyst towards driving further progress and development. On the negative side, experts are increasingly concerned that we won't achieve our net zero targets by 2050, and we need to do more. And in the US in particular, the whole idea and concept has become increasingly politicized.
Thanks so much, Nick. Now, the other three trends that you identified were the changing profit dynamics in the asset management industry. The second one was artificial intelligence or AI and regulation. Now, I know we're running out of time, but perhaps you can briefly talk to us about each of these. What do you mean by the profit dynamic in the asset management industry?
What I mean by that is essentially it's the effect of both the revenue and cost pressures which are impacting the industry. And this, on the one hand, is really good for clients, but it does squeeze the economics of the asset management industry. And as a result of this, we're seeing more consolidation and anticipate that that will continue. We're seeing increased vertical integration. And globally, we're seeing a shift towards low-cost passive strategies on the one hand and private alternative assets. It's a challenging time, but of course also one ripe with opportunities for those who can adapt. And we believe that our model of partnering with exceptional managers, we're well positioned and we're excited about the future. One of the most important roles of successful asset management companies is to ensure clients make informed decisions amongst all the noise. We've done a lot of research recently which shows the behavior gap between investor returns compared to the actual returns of the fund over time. And this gap is significant, and for us, it represents a huge opportunity to try to close, and at the same time, an enormous responsibility for both ourselves and our industry partners like financial planners to add value by closing that gap.
Oh, Nick, this is, a fascinating piece of research. Now, I know that you will be discussing that in greater detail in another podcast, so we're going to leave it for now. Let's move on to AI. I guess no trend list, as you said, is going to be without at least a mention of AI. What is your perspective on this?
Absolutely. It's a huge trend that I think almost everyone is now aware of, and I've spoken a lot about it recently. So to summarize it quickly, I would say what AI is doing is it is massively reducing the cost of creativity and intelligence, leading to potential things like personalization and efficiency at levels we haven't seen before. It's creating opportunities that were unimaginable and transforming how we can approach problems and solutions. However, there's also an undeniable element of hype around. And as we saw at the summit, not all managers agree on where the big investment opportunities are and who the ultimate beneficiaries will be. And this is where I think it gets really interesting from an investment perspective. To try to understand which companies will be able to capitalize on the AI opportunity and which companies will either get left behind or just back the wrong horse. The one thing that I do know with AI, though, is that what we see now is the worst it'll ever be.
That's really something to think about, Nick. And you have always encouraged people to get familiar with the tools and experiment with AI because it certainly isn't something that's going to go away. And I know that you've been an advocate for it. You can speak in our offices that we always, do think about it, use Copilot, which I certainly have found to definitely cut down on some of that preparation when you've got to read lots and lots of documents, etc. But lastly, Nick, regulation is constant in our industry, but you also spoke about it as a crucial trend to plan for. Can you elaborate on this?
Yes, regulation shapes our operational landscape, and big changes can have lots of impact and knock-on impacts. At a really high level, I think on a global side, some of what the EU is doing in terms of AI, things that are happening in the money market industry in the US, and things that are happening in terms of global minimum tax initiatives are all things to bear in mind, while in SA, the sudden decision on NHI, the imminent two-pot retirement system, are regulatory changes that cannot be avoided and need to be carefully considered and planned for.
Certainly. These insights are invaluable. Now, as we wrap up, please just leave us with your thoughts on how listeners should react or respond to these trends in their own lives.
Certainly. My primary goal when I talk about these things is encourage people to think about which of these trends are relevant and likely to affect them. And if so, how can they plan for it and be prepared for them to both leverage and, if it's a threat, how they manage that threat. Having said all of that, I want to close off with the words of John Bogle, which 30 years ago he mentioned. I think they're still so pertinent. And despite all the changes I've talked about, where I think the world's going to be a very different place, I think these will still remain true in 30 years to come. And what he said, we need a mutual fund industry with both vision and values. A vision of fiduciary duty and shareholder service, and values rooted in the proven principles of long-term investing and of trusteeship that demands integrity in serving our clients. And for all of us involved in the industry, asset managers, financial advisors, it's always good for us to remember that in the end, if the clients win, we all win.
Nick, thank you so very much for your insights. Always very valuable. That is Nick Andrew. He's the executive head at Nedgroup Investments. And of course, he was taking us through some of the major trends that we are seeing globally and, of course, how they are shaping the world for tomorrow. That is it from us. And until next time. This podcast is for marketing information only. The information contained in the podcast or video was for information purposes and does not constitute advice, recommendation, or an offer or solicitation to purchase or sell any funds or strategies to any person in any jurisdiction in which the offer, recommendation, or solicitation to purchase would be unlawful.